Tesla has broken a key support level on Friday's trading session, so where's the stock headed and should you buy? Sit tight for the next few minutes as I take you through recent news as well as my chart analysis and price prediction. But before we do that, subscribe to our channel Stocks 101 for regular stock market updates. First up, Goldman Sachs is bullish on the Tesla stock despite the stock getting cut by half in terms of its year-to-date price. They said that the company is the best positioned player in the EV sector and it will benefit the most as people shift to electric vehicles, and that the company will have better profit margins as they ramp up production in their new factories. Due to these factors, their price target remained $305, indicating a 45% move from the current levels. Next up, Elon Musk has hinted that Tesla might do its first stock buyback as soon as the earnings report comes out. One of the biggest shareholders of the company, Leo Koguan, tweeted that only a massive revenue jump or a buyback can save the stock from the current slump. Replying to this, Elon tweeted, "Noted," and investors immediately took this as a sign of a potential buyback. With all that in mind, let's analyze the chart. As you guys can see right here, we're now in the 1-day chart for Tesla, and of course, we'll first analyze the 1-day chart, then the 1-hour chart, and to end it off, we'll get to the 5-minute chart. But right off the bat, I won't waste any of your time. We clearly saw that the Tesla stock has broken the important $206 support range over here. Right, I gave you guys this level in my previous video, and even Bank of America, reiterated on that level, saying that after $206, the next support lies straight. Well, why is this not zooming out? It lies straight around the $180 to $182 range, right? So $180 to $182 should be the next support. Of course, we can clearly see that the $200 range would act as a psychological support. So in a technical scenario, the stock should probably go down to 186 or rather $182. But of course, as we already discussed, the Tesla stock is getting a buyback as suggested by a series of tweets, right? So Elon Musk, if he goes out and buys back some shares, right, that would probably result in a green candle. But if that does not happen, of course, the stock is going down, and of course, it will probably crash below the $200 range, in my opinion. On Monday, however, I believe that we'll probably open in a gap up since we've gotten such a big, rally to the downside. This was about 7.55%. So even if we get a gap up on Monday, let's say over here around the $206 range or $208 range, we'll probably break down below over here towards the $200 range, in my opinion. So the 200 psychological support level, let me mark it again. This level right here would probably be one of the most important levels on Monday's trading session. Now, another important thing that I can see over here in the past 3 candles is that we've made somewhat of a megaphone pattern over here, right? So we've, gone from this range over here, a pretty small one of let's say about a few percent, to these ranges which indicates a huge amount of volatility and selling and buying pressure, of course. This is a common thing when, earnings report and some things like important meetings and stuff like that comes up. So if you ask me whether the stock will go down or not, well, I can't really comment on whether this news of a buyback will impact the shares prices on Monday. In my opinion, the investors are kind of a bit too scared. So even if we get a gap up thanks to the news, we probably will get around to the $200 range. So the $200 range, of course, as I already told you, will be really important. With that being said, I don't believe there's much left to analyze in the 1-day chart. So let's get quickly into the 1-hour chart. As you guys can see right here, we're now in the 1-hour chart for Tesla. And of course, as you guys can see over here, the $206 range acted up over here on 13th. This was when I gave you guys my previous analysis. After that, we got somewhat of a triple top over here at 222.75. We can see that there's a common support level over here around $216. And after that, of course, there is a common resistance as well around 219.25. After that, of course, we can see that on 14th, we got a pretty absolute bearish trend, right? So the first candle, of course, really volatile. After that, the bearish trend just did not stop. So if we look at the last candles closely, we can see that there's not even much indecision, right? The first candle over here, which kind of pointed out indecision. After that, of course, we got another bearish candle, which pointed out some indecision. After that, a wider body, which means that there's basically less indecision. So this is kind of confusing in my opinion. But with that being said, I don't think there's much left to analyze in the 1-hour chart, so let's get into the 5-minute charts. Now this is where the main stuff lies, right? In the 5-minute chart, we can clearly see that over here, I gave you guys my previous analysis, right? And after that, we did see some volatility on the upper side, right? We saw a reversal scenario over here, a pretty perfect one as well. So let me explain it to you real quick. We can see that we got a negative pin bar candle and it was followed up by a positive pin bar candle. This, in most cases, indicates a reversal. So we can see that we got a reversal, and after that, of course, we were making higher highs, higher highs, higher highs. Over here, we broke the trend after hitting a resistance levels at 222.37 pretty much, right? An important support on the intraday chart would probably be somewhere around 216 as we already discussed. Another important support would be around here at 218.75, around here at 219.5. A resistance would be around here at a double top at $223. Of course, after that, we can clearly see that we did not get out of this range of, what is this, 219 to 222. So this was our range for the closing day. And of course, it was pretty much in clear bullish momentum, and that indicated a gap up, which did not go that well, right? We hit a resistance at 226.25, I believe, right? So let's just mark that level. After that, we got another reversal scenario. So when you get one big red candle, a smaller green candle, and of course an even bigger red candle, this just indicates a reversal. It's pretty much an engulfing candle trend. And after that, we can see that we got like absolutely bearish for the next at least 30 or 40 minutes, I believe, right? After that, we got a breather somewhere around here where, the stock did get another reversal scenario, but it was on the negative side this time, right? We got a green pin bar candle followed by a red pin bar candle. So this definitely does not look good. We hit a double top over here around, well, we hit several double tops over here around 214.5, after which we hit a double bottom as well over here at 211, which acted as a pretty good support, right? Another resistance on the intraday charts, 212.5. So let me mark that as well, 212.5, right? So after that, we can see that we got supported over here as well. But all in all, this chart just indicates that 14th October was rather weird, as I already told you. So in my opinion, if we look at the last candle over here, this just, strengthens my analysis even more. We can see that we got a similar reversal scenario over here, where we got somewhat of a negative pin bar candle, right? A pin bar candle on the downside, and then followed up by a pin bar candle on the upside. So this was probably an indication of a gap up on Monday. So if you ask me what's going to happen on Monday, in my opinion, well, as I already told you, a gap up over here in the $206 range. And then, well, if you ask me, if the support acts up, we'll probably get a rally right up. But that is kind of difficult. In my opinion, it won't happen. We already saw a pretty bad day on Friday. And as most of you think that a red day means a green day the next day, it does not work like that. With the Federal Reserve on their mission to kind of destroy inflation no matter what gets destroyed in the way, I believe that they'll keep hiking interest rates no matter what. So that, of course, acts as a negative, right? However, as Goldman Sachs said, the stock definitely has a good position in the EV market, so it will go up once, this entire mess is sorted. And in my opinion, if world affairs get even trickier, then it might be just worse for the entire stock market. With that, I continue to stand by my target, or rather my analysis, that the stock is bullish in the long term, but definitely not bullish in the short term. However, I believe that this price range anywhere under $210 can be a good buying level, because if we consider a price target of $300 in, let's say, just a year, that would be a pretty good upside even from the buying level of $210. And even if it takes more than just a year, a 50% return is pretty good if you ask me, even if it's for 2 years or 3 years. But remember that this definitely is not financial advice, so you should always do your own research before you trade. If you enjoyed my analysis, however, be sure to hit the like button. If you did not enjoy it, be sure to hit the dislike button. You can subscribe to our channel Stox 101 for more such videos, and as always, I will see you guys in the next one.